The dust is finally starting to settle on this historic crypto market crash, and the way sentiment is right now is making me believe increasingly that this is indeed a historic buying opportunity and one to match the likes of those that we've seen in other previous dismal market lows historically. There's some new information coming to light which I think paints a very interesting picture on what exactly happened and gives us clues as to what happens next. Let's get right into it. So Bitcoin actually popping over the last couple of hours, currently up at 113,244. Not a massive correction yet from the big crash, but prices are holding in a relatively stable range between around $113,000 and $110,000 to the downside. First thing to take a look at is liquidations. Over the last 4 hours, you can see that that has been stacked to the short side. That means short positions are losing out to longs on the 4-hour time frame and on the 12-hour time frame as well. So we're looking at about $170 million worth of short positions liquidated over the last 4 hours versus 60 million longs, and over the last 12 hours, $223 million worth of short positions versus about $85 million worth of long positions, and that is on the crypto market as a whole. I think what is pretty fascinating about this is people are still jumping in on long leverage positions. Somewhat ironic given that this move was really fueled by that historic $19 billion worth of long liquidations. Long liquidation risk right now peaking out at $107,000 at about $850 million worth of cumulative long liquidation risk, and then slightly less to the upside as well. But if we zoom this out to the 30-day time frame, you can see that is stacked on the short side. The majority of the market is short right now, and market sentiment is down. Okay, we're in fear. This was at 35 yesterday. We're now at a score of 31. The market is in fear and sentiment is in low. And essentially, to summarize where I'm going with this, right, we like to be, it pays to be greedy while the rest of the market is fearful. And yeah, the market is fairly fearful right now. There's a couple of details about this breakdown that I want to go into because I think it kind of paints the picture better about where we are contextually. The first is the issues that people had trading on pretty much every exchange. Okay, I've heard reports of people having problems with pretty much every centralized exchange. This to me is something more of a symptom than a cause. I think it's my belief that a lot of people don't know how to use leverage, and they certainly don't know how to use leverage properly, okay? My account isn't blown up, although we were trading futures, although I don't necessarily guard my futures account the same way that I guard my spot holdings, okay? That's money that I'm happy to lose, but I still don't really want the account to blow up. And I didn't let it blow up because I was using leverage carefully, right? I was using leverage properly. I wasn't over-leveraged. And we had risk management in place to avoid that from happening. But evidently that is not the case in the wider market because there were $19 billion worth of long liquidations yesterday. And as we know, no one's learned the lesson. Everyone's jumped in, again, leverage long. But when situations like this happen, people love to blame the tools, unfortunately. Now, I'm not denying that people certainly had issues with their exchanges. If you take a look at this article here, Binance faces intense backlash over the market crash, and some claims are shocking. As markets reeled from President Trump's tariff escalation, Binance, the world's largest crypto exchange, is facing widespread outrage after users reported frozen accounts, failed stop-loss orders, and flash crashes that sent multiple coins to near zero. We absolutely did see some alts go down 70 to 80% in individual candles. It was absolutely wild, as we all know. And Binance's official take on this was, due to heavy market activity, our systems are under high load. Some users may experience intermittent delays or display issues. We're actively monitoring the situation and working to resolve it. Some people making claims that this was blatant market manipulation. You can see here, Ola, due to our market makers' manipulation, some users may experience negative balance. We're actively making sure everyone gets a fair share of it. Don't celebrate yet. Your bag could still go down by minus 90%. If you're over leveraged and you've just been annihilated on your account, you've just been liquidated, you're naturally going to be very emotional and in most cases direct that emotion towards the exchange. I think what a lot of people don't realize is even in a futures market, right, there still has to be a market maker, and the market maker still has to match orders. So every time you want to buy or sell, someone else has to sell or buy. And in moments of very, very high volatility, like this massive, enormous, ridiculous wick that we saw, it can be hard to make markets. Okay, liquidity is very thin down here, and that is why the price bounces up so fast, in fact, because it's just very, very hard to match orders down here. So price can't stay there for very long. And that is also, by the way, why you see the wick in different places at different venues, because every different venue is using different market makers or different combinations of market makers, and that's why you'll see this bottomed out at 102,000 on certain venues. I think a lot of people don't understand that, and you're not always going to be able to sell at the price that you see on your screen. Now, usually that is limited to really, really big orders, but in times of extremely high volatility, and I mean this is really extremely high volatility, that's not always going to be the case. The other side of this is if people aren't able to access the platform, that is obviously a really bad situation and a really frustrating situation when you can't get into an exchange to close orders or to modify orders, hedge out of positions, etc. It's best practice not to keep money that you really, really care about on a futures exchange or on any exchange for that matter. I think any long-term bags that you're holding should be kept offline. You shouldn't be trading with money that you can not afford to lose. But yeah, the exchange confirmed it will compensate users, but only the losses that were caused directly by Binance's own system failures. And that sounds fair enough on paper, but on balance, in reality, how are you going to compensate something for something that happened when they couldn't log into the exchange? So that's yet to be seen, but I will be watching that closely and it'll be interesting. Something that I think is very curious is this massive short position. Early Bitcoin whale shorted $1.1 billion, and that was right before the tariff announcement, now up $27 million on that short position. So usually when we're talking about market manipulation or making accusations of market manipulation, what we're talking about is big players bullying price down so they can scoop up coins at lower prices. But this is an interesting case because it actually seems like this guy managed to front run the Trump tariff announcement with a massive short position. The way that this person was trading, it appears that they knew about the tariff announcement. A Satoshi era Bitcoin whale opened over $1.1 billion in short positions against BTC and ETH just before President Donald Trump announced 100% tariffs on Chinese imports, generating an estimated $27 million in unrealized profits as market crashed. The trader, identified by blockchain tracking firm as a Bitcoin OG, right, very, very old wallet, he held 86,000 BTC, and he had been holding those since 2011. Deposited funds into Hyperliquid starting October 9th to establish a highly leveraged bets against the crypto market's top two assets. As the market drops, this $1.1 billion plus short position are now sitting on an unrealized profit of $27 million. Did he have insider information? The whale's positions include a 10x leverage short on 6,189 BTC valued at $752.9 million, with a liquidation price of $130,810 and a 12x leverage short on 81,203 ETH worth $353.1 million with a liquidation price of $4,589. And again, it was the timing that was really suspicious here. Okay, the timing sparked widespread speculation about his insider knowledge, with the trader doubling down on shorts just 30 minutes before Trump's tariff announcement that sent Bitcoin plunging from above $122,000 to briefly below $102,000, as we've discussed on certain venues, pocketing between $119 million and $200 million in realized profits within a single day. So this guy's up $200 million by front-running this announcement. Community speculation intensified around the correlation between the whale's Satoshi-era origins and potential government connections, suggesting insider ties may have provided advanced knowledge of Trump's tariff. That is an incredibly suspicious situation. People are upset, okay? People are upset, understandably, about exchange issues, and you can see it in the fear and greed index. The market is very much in fear. Fairly mind-blowing. There is leverage, again, on both sides of the market. There's some historic dates that are plotted on the chart, okay? So we're looking here back to the Rona crash, okay, the FTX crash. Right, both of these times were absolutely dismal market sentiment. Big single day drops. And both times an existential sort of threat to the market, right? That wasn't just related to the value of Bitcoin. And indeed, both times are now times that we look back on as historic generational buying opportunities. I really wish that I got involved in Bitcoin, or I got involved in crypto after the FTX collapse. I plotted here former Trump tariff announcements. Yes, these impact the market in a big way. Not as big as we've seen just now. And again, the reason why the market results of this time was so much bigger was because of that leverage tinderbox that we discussed at length. Okay, there was just so much long liquidation risk in the market that any sort of catalyst like this, and it was a big catalyst, but any catalyst like this had the potential to set that off and cause a massive overextension. In terms of the news impact itself, we have always recovered, right, from Trump tariff news. But looking at this now, okay, prices are stabilizing. It's absolutely possible we see more pain to the downside from this. But one thing is for absolute certain, okay, if you like Bitcoin at $126,000, right, $125,000, and a lot of people clearly did, because there were a lot of people long in the top with leverage, then you should really like Bitcoin at $112,719. This is a massive discount. It's a massive discount that has come very, very quickly. And I don't think it's a massive discount that is really tied to fair value. We are going to see more clarity on this tomorrow. We're going to see whether or not this threat of up to 130% tariffs on China is actually going to be substantiated. We might well get hit with news that it's not actually going to happen at all, and we continue with business as usual. But this is what I want to leave you with. The FTX crash, right, immediately after that, it seemed like it was all over forever, okay? That is generally the best possible indicator you have to be accumulating Bitcoin and other crypto that you believe in long term. Right now, the way this chart is looking is pretty dismal, okay? And there are a lot of people in the market very, very dismal about the losses that they made over the last couple of days and about issues that they had with exchanges. But crucially, okay, it's not supposed to be exciting, right? You're not supposed to feel good about getting into the market when it's really good to get into the market. And that is because you are being brave when other people are being fearful. That is purely my opinion. I'm only sharing it with you for entertainment purposes. Absolutely nothing I say should be considered financial advice. Plenty more to come. Catch you in the next one. Bye.